Hello everyone and welcome to this afternoon's webinar. I can see in the list of attendees that some of you were with us this morning, so welcome again. And other of you, I have to get my words out in a minute. The rest of you clearly weren't with us this morning. Maybe you were in a different part of the world that you were doing something very sensible, like having a nice sleep. Anyway, wherever you are in the world, you're very welcome to join us today for this session. Before we start, as always, may I draw your attention to the disclaimer, which I believe you can see on your screen. I'm just looking over to David. David, can you see the disclaimer very quickly? I think, oh, that's it, fine. The disclaimer's up and running. Brilliant. As you know, and I'm sure you've heard this many times before, but I really has to be said every time we start one of these sessions. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. If this is your first time to one of our sessions, this is me and my husband David sitting next to me, and we will be looking at the markets, in particular the American markets, the indices. I think we're going to look at some commodities today. Gold is quite interesting, and oil is quite interesting. We look at the markets through the prism of volume price analysis and supported by our quantum tools. I know we have some of our quantum users, and I think we also have some of our Forex program students who come along as well, so and new people as well. But whichever camp you fall into, as I said, you are all very welcome. And if you've got any questions, those of you who perhaps are on the program or are quantum users, please feel free to drop them into the chat box. If you've never come across VPA, never come across a quantum trading, then to stick around. It's the methodology. It's not a new methodology. It's been around, oh goodness, over 100 years. It's basically using it's putting together price action and volume to help us anticipate what the market is going to do next. My books are up on Amazon, which explains the methodology in very great detail. This is the book that started it off, The Complete Guide to Volume Price Analysis, also published, been translated now into both versions of Chinese and Japanese as well. And there is a follow-up book to that. There's an accompanying book which actually gives a lot of worked examples of the methodology. It was one of the questions that I'd been asked following the publication of the book. Could I possibly come along and could put together some actual examples of the methodology in action across timeframes? And that's what we've done. You can buy the book independently, or we've put it together as a little box set. And this is the one that covers really stocks, indices, and commodities. There's a Forex one, but that is separate. So there we are. That's you can find there. The quantum trading tools that we're going to be using in these sessions, you'll be able to see how they work, how they support volume price analysis, what do they tell us about the charts. They try and make our life a lot easier. We use them in a discretionary way. We don't use them as part of any EA or automated trading. They're there, as I said, as a support to the methodology. Price action and volume, the kind of volume we look at is the histogram that you see at the bottom of the chart, but we've actually developed an indicator that looks at volume across time, and it's on the y-axis of the chart, and it uses elements from a market profile. It's the volume point of control, and it helps us to give the chart some kind of structure in terms of what are we looking at the chart. Are we looking at a trend? Are we looking at a congestion phase? Are we looking at a potential breakout? And this is what the VPOC helps us to determine. The tools that we're using in this session, primarily for NinjaTrader, it's just a sort of happy accident that we have done so. They are also available for MT5. You can trade instruments other than Forex on MT5. They are kind of derivatives of the futures market, and also, but you can also trade not the stocks themselves, but it's the chart of the stocks. It's on a CFT basis. But we're sticking with NinjaTrader for this session. We are also producing these indicators for TradeStation. But if you want more information on the indicators, the website is quantumtrading.com. You can buy one indicator, you can buy a bundle, or you can buy the full package. and we also offer an easy payment plan on the individual, the bundle, and the full package. They're all covered by the 7-day money back guarantee, and you can find all the costings and the details on the indicators, as I said, at quantumtrading.com. This is my own site, annacooling.com. It's where you'll find details of the books. You'll find analysis, you'll find forex analysis, just comments, and really how you how volume price and how I use volume price analysis, as I said, on the indices, commodities, and there's a lot of stock analysis there as well. So that's me. I'll just turn myself off and see if David wants to add anything to that, because I believe, has he started speaking yet, Pence? So I'll go and have a look, because it's been a bit of a very important day today in the markets for all sorts of reasons, and we'll just touch on that in a second, because we really want to get to the charts, because I see from over there there's been some quite nice price action so far. Yeah.
Oh, just for chat. Okay, great. Good afternoon, everyone, and very warm welcome wherever you are in the world. Hope it's warmer where you are than where we are, because it's pouring with rain and it's foggy and horrible and cold. So I hope it's warmer where you are. If you have any questions, please just drop them in the chat box. Happy to answer them there. Or if they're longer questions, we will answer them on air for you. I've just got all the indices running on my side and got commodities as well. So we'll take a whiz around the tick charts and the time-based charts. And we're going to have a look at gold and oil and what's happening in terms of currencies. So we'll take a whiz around everything just to build up a picture of risk, because that's all this business is about. It's risk on or risk off. It's about sentiment. It's not really about anything else. Just going to pass back to Anna, and then we'll swap screens, I think.
Just a quick summary of what's been happening today and where we're at on today's agenda, as it were, for the markets. This is just from CNBC. It's the busiest day for earnings, although I have to say a lot of the companies aren't actually reporting until after market hours. We see this headline for Tesla. If you've been reading any of the comments about Tesla prior to the release of the numbers, my goodness, you would think the company was on the point of collapse, basically. So that's due to happen. Some, I think, come out during the trading session, but I think the vast majority is after hours. That's already happened. Goodbye, Mario. So he's off, and what has he got? As a decanter and a couple of brandy glasses, I don't know, but that was his last press conference. I don't think there's been much of a reaction in the markets to that. You know, everyone knows it was going to be his last one, and we'll see what Christine Lagarde can do next time around. This is the one that this is the event that I wanted to highlight. It's not on the economic calendars, which is why I asked had he actually started to speak, because he's speaking about China, and clearly the talks are still bubbling in the background, and so anything he's got to say are going to be the market is going to pay very close attention to. Generally speaking, let's go to investing.com. What have we got? Well, the S&P were up before we started, but now they're sort of down a bit. It was over 3,000. Now back it's down to 299. The Nasdaq hasn't quite got to 8, and the Dow was. Yes, David said there's a lot of volatility at the moment, but it brings me very nicely to a topic that we will be covering in more detail in subsequent webinars, and also we do it. We're also doing it in the forex sessions as well, and that is when we come to as we start today. We have a quick look around. We see what's happening, what has happened, what is likely to happen. Sorry, there was one other thing that did also crop up, and that we had the PMI data for the US, which actually came in over 50. 50 is like the inflection point. So anything below 50 and falling, the economy is in crisis. Anything over 50, it's considered to be a positive. So these are the numbers this morning for France and Germany. You can see here the German one, the manufacturing one, was absolutely dire. It's way off 50. In fact, there's a little little chart there you can see there, that is really explains the situation that Germany is in at the moment, and is not a very pretty chart. And I think, as we mentioned last time, there's in the background there's also tariff disputes between the US and Europe. So there's a lot of things going on in the background which could affect what is happening, what will happen in the markets. Now, the market, so we have a whiz round, we see what the sentiment is it positive, is it not positive? We look at the VIX, we look at the yen, and we kind of get a picture of, what is the market mood for the day? This is obviously if you are a short-term trader or a day trader. But there's something else that you have to look at, and that is you have to look at the condition, the state of the chart that you are, the chart that you are looking to trade. And what you have to try and determine is basically, this is the YM. And you can see here this great big long trend. I know we had a little bit of a volatility and a pullback there, a sort of correction, a bit of a congestion phase, and then on up. But it's been marching relentlessly higher, really, since 2008, the financial crisis. Yes, when the S&P hit 666, and it's been, wouldn't say it's been one-way traffic, but it's pretty much been one-way traffic. Now look at what is the chart telling you at the moment. Now this is the monthly chart, but it could be any time frame. I just want to use the monthly to highlight that this is what you have to establish. What are the trading conditions? What trading conditions am I going to face today as a short-term trader, a day trader? Am I looking at a condition like this, where you've got, steadily rising market, narrowish spreads, but generally bullish and going up? That is very different trading conditions to what we see at the moment. This could conceivably be a huge, the first of a major distribution phase. It could, because we've had a trend higher, we're now going sideways, there's a lot of volatility, as you can see here with the volatility trigger, and you've got up days, down days, and you've got big wide ranging days. Great for trading, assuming you're not chopped out in the whipsaw that will inevitably happen when you have this kind of candle. Plenty of trading opportunities. So the condition of the market when it's doing this as opposed to that has all sorts of implications. First of all, you need to recognize it. Secondly, it could determine the tactics that you are going to use in this type of market condition. And thirdly, much more important, it also determines the risk of the trade itself. This kind of, not easy market, but steadily rising market, it may be a bit of a grind, but overall, it's got a sort of bullish bias to it. This type of market, it could go anywhere. And you as a trader, you may not feel comfortable trading in this sort of market condition. Maybe you are looking to be a trend trader in this kind of market, which is fine, but you have to recognize that fact. And the third part of this is your money management and your stops, because in this type of market environment, chart environment, your stops may have to be wider. You may make more pips, more money very fast, but you may also lose it very fast as well. So you may think, and you may look at that and think, do you know what, this is really not for me. I think I prefer to, look for something where I can see a reversal. I can see a setup that I feel more comfortable with, maybe as look for a trend that's come to the end, and look for a potential entry on what we call a potential reversal trend. That carries its own, advantages and disadvantages. And this is the kind of thing we want to talk about, because volume price analysis will help you enormously on this, as will our quantum tools. Now, I talked about the volume point of control. You can see here, volume This is looking at support and resistance, includes volume as part of the support and resistance indicator. So it is also it's also used as a point where it's a fulcrum of the chart at the moment. You could also say it's obviously a congestion phase, but it's also a point the market can't really decide whether it wants to go up, carry on higher, or whether it actually wants to break and carry lower. And that is, a distribution. We are in a distribution phase prior to a major rollover. There are signals in this chart at the moment which would suggest that if it holds above this point here, there is potentially some further upside. It's not quite ready to roll over, and it's really in where the wicks are to the candles. So we can see here they're all below the candles. So every time it's dropped down, the buyers have stepped in and pushed it up. Every time it's dropped down, today it's dropped down, and now it's pushing back higher. What is also very important with this chart is, and it's another factor to consider, is when you're looking at a chart, is it at an all-time high, or is it close to an all-time high, or is it looking to break out of an all-time high? That is when a lot of nerves creep in, and that is also going to affect the trading condition, the condition of the market that you are going to be, the trading conditions that you are going to face. The analogy we use, David and I, is called sea states. It's a sailing, it's a weather analogy, a sailing analogy. You've got your little boat, you want to go, you want to go out for a sail. What are you going to face? Are you going to face a force 4 or 5 gale, or are you setting out and it's all a little bit in the doldrums, and it's going to, you are going to get there, but it's going to be, it's going to take a lot longer, as we can see here. You also have to remember that if this does turn over and fall, markets fall much faster than they rise. This moving up here at this sort of steady, stately pace takes time. You can see the time it took. We had right back here where we've got 2012, it went higher. Then I think that was the first scare back in 16. Nobody ever remembers these things, but look, oh, that's a major top. Oh, look, it's going to roll over. Oh my goodness. But look at the candles. We had volatility, wicks to the bottom, strong support platform, down days, back to buying, down days, down to. Now, there's lots of reason why there was this buying. We all know about easy money, cheap money that's been made available because of the central bank's QE program, and that money has had to find a home, as it were. So asset classes have been inflated beyond their true value, as it were. But as a trader, that's what you have to recognize and trade what you see. You can't make a moral judgment on whether that's been a good thing or a bad thing. And the last thing I'm going to say, because I know David's got the charts, and that is this. What you may be reading in the press about the advantages of, this is from an investing perspective, whether you should be a passive investor. In other words, you just put your money in an index and you forget about it, and you let the index, do whatever it is going to do, hopefully go up, rather than be an individual stock picker. And a lot of funds who have stock pickers who have been, trying to work the market, finding the best stocks, whether you call them value stocks, momentum stocks, and sort of build a portfolio that way, and increase the value of the fund in that way, have had a pretty tough time compared to the funds, the investors who've just parked their money into one of the indices. This happens to be the YM. They've done phenomenally well. And in fact, back in 2008, when the financial crisis was on, after sort of the turn, as it were, I think Warren Buffett said he laid a bet. He said he would give $1 million to charity, precisely that if passive investing, putting into an index, would it outperform stock, more active management of a portfolio? Active management means actually buying and selling. And of course, the passive has done phenomenally well. But why has it done phenomenally well? Well, you only have to look at the chart. So as an investor, when you're thinking of your tactics to the market, at the moment, passive investing in this kind of market condition is going to give you days when you think, oh my great, my investment is up, and days when it crashes back down. Whereas in this market environment, all you see is a steady rise because of the market conditions. So as an investor, your tactics, as I said, if you understand what the chart is actually telling you, or the market is actually telling you, so, you may have to adapt your approach, as it were. And in fact, this whole thing about passive and active is coming to the fore now, because this is almost 2 years. Is it 2 years this has been in this state, David? This long consolidation. Yeah, we're talking December 17. Which is when the Fed raised interest rate. So as I said, this is a very different market environment from this market environment. So if you've gone into the market here as a passive index investor back in 12, you would have been absolutely thrilled with that. Perhaps not so thrilled with with the sideways action, but then it's picked up the momentum again, and away you go. So we're going to talk about that and a little bit more. Also, what do we mean by value stocks and momentum stocks? Why value and momentum? Why value stocks are now coming back again? Because momentum stocks do well when money is very cheap, basically. But and also the market condition suits value rather than momentum. So lots, as I said, there's lots coming later on, but I just wanted to lay that out because I didn't have the chance to do it last week. We weren't here last week for various reasons, and we'll be building on this every week. I'm not going to repeat it every week. I'll just say it once. The recording will go up, so new people that join can just listen to the first part of the recording and then catch up in that way.
Just going to switch screens over onto my side on Ninja. Should be coming up any minute now. There we go. And we're on the NQ multiple time frames. Just to pick up on what Anna was saying, in terms of what that price action is, we don't believe that is a climactic top, purely based on the price action alone, because you've got a lot more downside wicks than you have upside wicks. And if it was a climactic top, then it would have a lot of upside wicks, which it hasn't. So just to cap that one off. There is a question, I know, Al, I think you've asked a question on what are the horizontal lines. I will try and cover that as I'm going through as well. But I just want to get onto the charts. This is the NQ I've got. This is the NQ future, the emini future for the NASDAQ 100. I've got the 15-second up here. I've got the 5 and the 10-minute across the top. Down the bottom, I've got 15. I've got 60-minute in the middle. I'm over onto the daily. And I was talking about reversals. It's kind of what we're seeing at the moment. If I just we'll just have a quick whiz round and just show you what's going on right now. I don't know whether Mike Pence is speaking at the moment or not. If we head over to this one, for example, this is gold, which kind of pulls together some of the sentiment, if you will, in the market right now. Gold's been rising since around 2:30. This was the open of the cash markets for equities, and there was pretty heavy selling of the equity markets on the open, and that has also been reflected in terms of sentiment towards gold. This line here, this is the Japanese yen, and we've seen strong buying of the Japanese yen and equally strong selling of the Aussie dollar here. And if you're aware of the risk sentiment for the Aussie yen pair as a proxy for risk, then that is why the equity markets are falling. And that is partly why now we're starting to see some reversal in equity sentiment, because we've got buying not only of the Aussie, which is a risk currency, we've also got buying the New Zealand dollar here, the grey line as well. And we've got the Japanese yen, which is overbought, now starting to sell off. And the strong buying in the dollar, which was the red line here, that was partially or probably principally as a result of the fundamental news which came in, which was better than expected. So we saw strong buying of the dollar. We've seen weakness in equities. We've seen buying of the yen, which was reflecting risk sentiment, selling of the Aussie, and pulling that all together into the gold market, which has seen a decent run up and now coming to a little bit of a pause point. Just head over onto the indices themselves. Sorry, the currency indices. That's what's going on right now. This is on 5 minutes. So we've got the yen, the dollar, we've got the euro, and we've got the British pound at the bottom right, which is less relevant to what we're doing at the moment. This is the euro, but up at the top, we've got the dollar. You can see the strong buying in the dollar there. And you can see the strong buying in the yen here, which is, we saw this 2-bar reversal. That came in when Anna was talking, just keeping an eye on that. And that was obviously hinting at a reversal, which we're starting to see in terms of risk sentiment. But a lot of it hinges on what is said by Mr. Pence. Let's just go back to the indices themselves. These are the 3 primaries. got the YM, which is the Dow 30. That's the E-mini future for that one. We've got the NQ, which we'll go over to in a minute. And this is the ES, this is the S&P 500. All of those on 5 minute, all pretty much universal in sentiment for the time being, but starting to show a reversal possibly coming into play. You can start to see it reflected here a little bit. You've got some decent buying under this candle here, you can see. Nothing really under that one other than we're seeing a fall away in the general selling. If you just look at the red volume bars, the nice thing with Ninja is this is 2:30, so this is open at the cash markets our time here in the UK. So you don't have to hunt around and try and figure out whether you're 2 hours behind or 2 hours in front in terms of MT5 or MT4. So this is printing in actual time, so we know roughly where we are, we know exactly where we are. And we're starting to see that attenuation in terms of selling pressure, and it's a question of whether we're going to see a pickup in buying pressure, in other words, rising of volume to accompany the rise in the market, because when a market's falling, you need to see rising volume. When a market's rising, you need to see rising volume. It's one and the same. Down at the bottom, these are the daily charts. Just pick off one of those. They're all pretty much the same. This is the ES. In fact, I'll cover off the question on the horizontal lines. There were more lines on Anna's than on mine. The primary lines, these lines here, these red and blue lines, these are on the accumulation and distribution indicator. Basically, they display and they print areas of resistance or support. The wider the line, the stronger that area. And it's purely based on price, so nothing else. It's not based on volume, it's purely based on price, and it's based on the number of times a level has been tested and held. So the wider the line, then the greater the times that has been tested, and therefore the stronger it is likely to be. So these levels here, this one is pretty weak because it's probably only been tested once and held, whereas these have been tested and held 3 or 4 times and therefore much stronger. We've got one up here, which you can see here, this red dashed line, which is literally being tested at the moment on the daily chart. So that's coming into play. You can see it over here. It's a very strong level. You can get stronger ones. You can get even wider ones than these. But that's pretty strong. So for the market to continue high, we need to see decent volume. We need to see a break above that. If we get through 30.20, maybe up to 30.25, then we're weighing clear. And then we have a very, very strong platform of technical support in below for a further advance in equity markets. And we've got the volume point of control here. The yellow dash line here is the fulcrum of the market. It's where price agreement has been reached, and therefore the market congests, and therefore you get this build-up of volume. The volume point of control indicates where the maximum region of volume sits on the chart. And then you have the histogram, which displays the other areas which are low volume, as here. We've got higher volume and then volume falling away as we move down to these lower levels. And the key from a trading perspective is very simple, because volume-based congestion works in exactly the same way as price-based congestion. The accumulation distribution indicator here prints these levels based on price, whereas the volume histogram will give you these regions based on volume. So as the market, if you're a trader and the market's coming down to this level, this low volume region, then the possibility is and the probability is the market will move through there pretty quickly, purely because there's little in the way of either price or volume to cause it to pause. And that's the way to use the indicator, certainly from a support and resistance perspective at any rate. So that's where we are on the daily chart. Let's head back onto the quick time-based charts. There we go. See what's going on. Still flip-flopping around. That's on the 60-minute. Doesn't look terribly bullish on that particular time frame. Wick to the upper body, closes halfway down. Absolute ton and a half of volume coming in, so some pretty heavy selling in there. Let's just go to the tick charts. That's on the time-based charts. Let's go to tick. I think I've got the ES set up on the tick charts. Yeah. So on this particular workspace, I'm on tick charts now, which, as you probably know, are independent of time. There's no time aspect. This is exactly the same as a Renko chart. So what you're seeing here is raw price action momentum. A time-based chart does not reveal that, purely because it's based on time. So a 5-minute chart will cut off at the 5-minute time. These candles will build according to the number of ticks. This one is running at 987 at the moment. Need to slow that down a bit because it's currently very slow, very sluggish. So we need to change that down to 610. So we just change that there. And this is off the tick speedometer because there's no other way of knowing what to set the chart to. A lot of traders guess, they have no idea. This does it automatically. It delivers those tick speed settings for you. So you can see here on a 1 minute time frame on the ES contract, the optimal setting is either 610 or we can set it to 741 as the actual, but the actual will change very, very quickly all the time. So we've come up with this mechanism, if you will, to give a number that's close to the actual, so it means you don't have to change the charts quite so frequently. So the 1 minute's currently running at 610. The 3 minutes currently running at 2584. So I'll just change that one over here. Move that over onto the tick now. And the other one's running at the same speed as well. This is what it was running at earlier on, not long ago, 4181. Now we're down to, as you can see here, 2584. So it's slow, it's very sluggish. The red and amber here just gives you a heads up, or the red and orange just gives you a heads up as to whether the market is sluggish or whether it's active. You want to see it primarily running in orange, and ideally with orange intermixed with green, which represent pickups in tick volume. And the other reason we developed this indicator was twofold. First of all, to actually deliver the optimal settings, because most traders guess at their tick charts. They haven't got a clue for any instrument. They just guess at something or the other. And secondly, to allow a blend of volume price analysis with the advantage of trading off a tick chart. The advantages of trading a tick chart are exactly the same as Renko. You will see momentum revealed in the chart itself. So each of these candles here on a 610 tick chart, they will build in different times, and that will depend on how fast the market is moving. If it's a market that's got real momentum, these will come out very, very quickly. They might come out in milliseconds or nanoseconds. If it's a sluggish market, they might take a few seconds to build. The point is that each candle builds in a different time, and that is independent of the chart and purely dependent on the speed of the market. And that's why traders, particularly in trading indices, particularly futures markets, will use tick charts, because that is not revealed on a time chart. You might see volatility on a time chart. What you don't see on a time chart is raw momentum, which you do on tick charts. It's one of the huge advantages of trading using a tick chart based approach. You can blend it with a time-based chart. Of course, you can have the time-based charts alongside, absolutely no problem at all. And you can apply the indicators in exactly the same way. We've got the trend monitor here at the bottom, which is giving us a heads up on what is going on in terms of trend. We've got the volume point of control down here, so we've got the VPOC, so we can see where our volume histogram is. So if this market is going to move up to 3005, 3006 region, we've got a low volume region here, so we should move through that pretty quickly. You can also see down here we've got these two levels. If you remember, this is on the accumulation distribution indicator. These are price-based, and these are quite wide, so they've been tested and held several times. We've got a cluster of two here, so this is a pretty strong level, purely because we've got one and then we've got another one below. So if that is going to act as a platform, that's great. That's what it should be doing. If it's going to be breached and become resistance, then equally it will become very strong. Literally being tested on speaking. But if it breaks through that and perhaps on up to this region, then the market should take off. But if it's going to reverse low and go through those, then that is going to cap any advance and be a pretty strong barrier to any further move higher. Just checking out what's happening in terms of the other time frames. We're still running red here, so it's pretty sluggish. For those of you who trade the ES regularly, you'll know that these levels are very low. This should be up into 2,000 or 3,000. This should be up into several thousand. And in a fast market, up on a 5 minute on the ES, this should be up in 10, 15,000 ticks. So it gives you some perspective on the fact that the markets are very sluggish. There's no real momentum at the moment. If this was a fast moving market, these candles would be coming out literally like a machine gun being fired. Literally one bullet after another, very, very fast indeed. They're not. It's very sluggish. It has bearish sentiment. There's a lack of desire to rally at the moment, and it's all looking a little bit weak in terms of any further move higher. Let's just go back to the time-based charts. There we go. See how we're doing on 15 second. It's a chart personally I like to use because it gives me a heads up as to what is coming up at me in terms of the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, etc. It also means that I keep very sharp in terms of VPA reading, because you have to do it at speed. And just to give you a heads up what's going on at the moment, let's pop this one up. This is 5 minutes, pretty slow. Exactly the same principles. We've got the accumulation distribution up here. We've got the volume point of control sat up here. We've got a low volume node above. And we've got these levels of both support and resistance, which are constantly coming into play. And we've got a lot of them here. This one's very strong at the bottom here at 79.22 odd. This one has got a strong level and a weaker level below, so it's a little bit of a cluster. We've got this capping off level here immediately above. So there's an awful lot of stuff around at the moment in terms of, certainly from a technical perspective at any rate, which is both helping and hindering, but it's the question at what point are we going to break away from this. If we move down onto, let's go up to the 10-minute. These are pretty much the same. Pull that over a little bit. This is running on Globex, this volume through here. This is all Globex. This is overnight our time. This is into London. The reason this is all compressed is because we've had the cash markets open. We've had huge volatility to start with. Inevitably, we generally do at the start of the US cash markets. And you get a huge volume surge coming in, and now we're starting to settle into the session. That's on 10. This is on 15. More indecision with this huge long-legged candle here. We're starting to see some buying coming into the market on this one. Indecision on that one, but certainly some buying on this one. Decent volume under that candle, and the market is trying to rally off that. We've got a relatively low volume node ahead, so we should push through that fairly quickly. Just move the chat box out of the way because it's covering up. We're up at 79.40 now. So we're starting to see some bullish momentum coming in now. Let's go up onto 15-second. Okay, we've got a decent candle there, a bit of a wick to the upper body. Good volume though. Certainly some selling in there. Now we're starting to see the market rally a bit. We can see the trend monitors transition through to bright blue, which is good. We've got rising trend, which is good. Volume under that last one is probably a bit less than I would want to see, purely because we've got higher volume here, lower volume here, which is not a particularly good sign, but we'll see if that follows through or not. Let's go up onto 5. Okay, let's see where we're going. We've gone through that low volume node, which was no great surprise. We've got some resistance overhead. In terms of price-based resistance, it's not terribly strong, but it's certainly there, something to be aware of. The volume is then building, and absolutely guarantee you that if we get up to anywhere near 48, we're up to the volume point of control at which you expect the market to congest. It will congest purely because we've got a huge amount of volume there, and it is also the fulcrum of the market, and therefore the market considers it an important price point, and therefore inevitably it will pause there again and congest. The question you've therefore got to ask yourself is, if I'm going to take on a trade now, certainly from a scalping position at any rate, and given I've got this up here, do I actually consider that 4 or 5 points is enough for me? Certainly in terms of the NQ it might be. If it was the YM it probably wouldn't be. Is that enough for me? Do I want to take that risk given the prospect of the market pausing at this particular level? So it's always a question of what's ahead. Is there enough opportunity for me? Is the market, is the technical picture clear enough for me to make enough money to offset my risk on the table if I'm putting out however many points on the table as risk? Does this possibly give me enough reward? It might be 1-to-1. Perfectly happy with 1-to-1. All the risk-reward rubbish that you read about or hear about is total nonsense, to be honest. You have to look at the chart and decide for yourself. Take it on a 1-to-1 or 1-to-2, whatever it may be. Take what the market gives you and what the chart's telling you, and not what you think you need, because the market doesn't care about you one iota. Let's go up to the 10-minute. Trend monitor hasn't transitioned. You wouldn't expect it to see any change yet. Because it's stepping back from the market, but certainly in terms of, you can start to see it here, the 15-second certainly has. It's picking up the bullish tone, which is changed right down on this fast time frame. We're up to 45, 46. You can see here it's starting to transition. This is the power of the indicator. I cannot stress too strongly, the hardest thing to do in trading is to stay in a position once you're in. You may or may not believe that, but that's a fact. We've done this for 20 years, Anna and I. And that is the one thing that most traders fail at. It's to maximize their profitability once they're in a position. And that's what the trend monitor does. It helps to keep you in, and if you use it in multiple time frames, even more powerful. In fact, I would say it's an absolute de facto standard that you use it in multiple time frames, because it will help to keep you in. If you cannot stay in trends, once you're in a trend and you've got a half decent position, you'll never push the trading account forward, because what will happen is all the small losses will be outweighed by equally small gains, and that just flies in the face of the mathematics of trading. It's as simple as that. And all that will happen is gradually your trading capital will decline, probably slowly, but you won't go forward. And to go forward, you have to take these positions and hold them for as long as you possibly can without suffering the emotion of seeing a pullback and instantly wanting to take the profit off the table, which is what most traders do. It's a natural reaction. It is our instinct to do it. We all do it. We have to fight that instinct, and to fight that instinct, you need indicators to help you, particularly when you're starting out. It's as simple as that. VPA also helps you because one of the things we cover in detail in the education program is really, and it is the Forex program, I appreciate, but it applies to all markets, is understanding what is a primary and secondary trend and using VPA to help you. Because if you can interpret VPA correctly, and when a trend has started, if you see a pullback and you can identify it as a reversal from primary to primary, in which case it is a full-blown reversal, or it's simply a temporary pullback, in other words, a secondary, that will save you an enormous amount of money and keep you in the trends in the same way I've just described. Just pop this up. A little bit of weakness coming in on that candle. You can see it there with the volume. It's what you expect to see. You've got an effort to rally, wick to the upper body. You know, no great shakes. You've got some indecision here, decent volume, but indecision. But you know, it doesn't look as though the bullish phase is quite yet done. We've had a transition in the trend monitor, which is fine. It's gone to dark blue. What we want to see is a reversion back to bright blue. Trend line never got down to the fulcrum point here at 0. See that kick up again. Okay, we've got lowish volume up here. Okay, we've got a bit of weakness on that candle, a bit of wick to the upper body, decent volume under there, a little bit of selling coming in there, probably some profit taking. This is still transitioning through. We haven't seen any change here. Now we're coming up to the volume point of control. You can see it here on the 5-minute. This will be key to any further advance. I'm just going to flick over and see what's going on in terms of, sorry, you normally have multiple screens. It's very hard to do this on one screen. Where I go here quickly, let's just have a quick look at the yen. Okay, it's kicking up again. Okay, New Zealand's selling off, Aussie's still rising, so a lot of mixed sentiment in here. Okay, gold's still there. Okay, let's just go back on here. There we go. So it's not the universal picture on sentiment at the moment, a little bit mixed. Let's go back up onto 5, there we are. Okay, so we've got that coming into play, so we know that's there. Let's go on to the tick charts. There we go. Nice move on tick. Let's see what the tick, we're up to 987 here. Okay, let's change that up. Okay. That's on 2584. Step this down. This is 2584 at the moment, so they're both running in parallel. So we've got the identical chart there. Okay, let's have a look at this one. Okay, we've got through this region here, which is nice. We've got a very, very strong platform in underneath here. We've got the volume point of control, and we've got this very wide area of price-based support. So that's really, really helping push that particular market up. This is the ES. This is not the NQ, but generally speaking, we expect to see them all moving in pretty much the same direction, but not always. We do get diversion from time to time. Trend monitor has now transitioned. We've gone through into bright blue, which is great, helping to support. Same here. Obviously, this is the same chart. And this is the daily for the ES. And we're just testing this region up here. Really want to see that force through there. And if, as I said earlier, if we can get through anywhere near sort of 3015, 3020, then hopefully the market will be able to take out this top and break away from this very extended congestion phase that we've been in for a long, long time. This is still running in red on 3. I'll just pop that up full size, see it a little bit better. And again, you can apply VPA here because we're on a minute time frame. We've got the volume here so we can see what's going on. A little bit of weakness coming in on that one. But we're through this, just eyeballing it, this level through here, which is, you know, a decent platform of support. So hopefully that will hold. But that's still running sluggish. You can see it here, it's slow, slow, slow. So the market is very sluggish at the moment. This is not a fast-moving market. Nevertheless, there's enough here to make some money if you're comfortable being light on your feet. If you want to see more momentum driven into the market, then you need to wait for these to go to medium and revert to a faster market that's moving with some momentum, which it isn't at the moment. Nevertheless, possible to make money in here. Let's go back here. Okay. No great surprise to see this type of price action because the 5-minute chart's telling you that's what to expect. So what are we seeing here? Very low volume here on the uptrend. So the market's going to roll. We're also coming on even on the 15-second chart. Just click that out of the way, make sure I click the right one. There we go. We've got the volume point of control here as well. So we're coming back down to that on 15-second. The indicators work, it doesn't matter whether it's on a 15-second chart or a monthly chart. The indicator's working exactly the same way. It will give you the information whether you're a scalping out and out scalping trader trading tens or even hundreds of times a day, or whether you're a slower, longer term, you prefer to trade trends, momentum, you're looking at slower time frames, you're on the hourlies, the dailies, whatever it may be. Okay. Sorry, when I'm in full flow, I have the chat box out the way. I don't look at it. I'm sorry. I like to concentrate on what I'm doing, but I will come back and answer the question which Anna's highlighted. Okay, now we've got the pickup in the bullish sentiment once again. The trend monitor here, you can see, started to signal the slowdown in the bullish sentiment, which is what we expect to see. It went into the darker blue, it went into darker red. It looks as though it's coming out into darker blue again and possibly reversing back to bright blue. So it never actually got into the dark red stage, and really that's what this is all about. It's just helping you to remove some of that fear of staying in, because if you manage to claw your way from, where did we start? I can't remember now, somewhere down here, and you maybe, you know, have got 5, 6, 7, 8, 10 points, and then this sort of thing starts to happen and the market maybe starts to take off and rocket, and you've closed out with what you considered at the time to be a decent little bit of money, but then you start to see the market really take off, and you start to regret not staying in, and that's where it comes into play the whole time. Let's just pop this one open, make it a little bit easier to see. There we go. So now we've got in front of us, we're starting to move away from the volume point of control on 5, and we've got low volume throughout. So all this region up here, we've got low volume. So the market should move through there pretty rapidly. The trend monitor's transitioned through to bright blue, which is great. The trend line is rising nicely. We're moving away from the midpoint here at 0. And all things being equal, assuming that no one says anything and volume is good, which it is at the moment, that's fine. There's nothing particularly anomalous about that. Yeah, we've got some little wicks here, but nothing to frighten the horses particularly. And over on the 10-minute, we're now starting to see that transition through into a change in sentiment. You can see it on the trend line. It's rising nicely. The trend monitor is in transition on darker blue, and on this occasion it hasn't actually gone to one of these. It hasn't gone to darker red this time. It's just gone straight from bright red into dark blue, which means it's changing more rapidly. In other words, it's a quicker change into potentially a bullish phase of price action. So it hasn't bothered going through the traffic light system. It doesn't have to, it doesn't automatically do that. It does, generally speaking, but not always. Sometimes it goes straight from bright red to bright blue if it's a really quick, rapid change, if you get a V-shaped reversal, which we've had on some indices markets, then it'll transition literally from one color to the other, almost well, without a color change in between. Okay, so look at 15 seconds, see what's going on. Okay, we've got pivot high, pivot low, a little bit of congestion. These little arrows just signal intraday, intra-chart, weakness and strength, if you will. You're looking at lower highs and lower lows in terms of the candle on the center. So here, for example, you've got a candle with a lower low on either side of it and a lower high. So it indicates a pivot. And the way we use the pivots, again, it's something we cover in detail. It's not just a simplistic way of looking at price action, but we actually use it to help to understand when a market is moving into congestion. In fact, as it is here, we've got a pivot high and a pivot low. And what we're looking for now is potentially either another pivot high or a pivot low. There we go, the pivot high is coming in. So we know we've got a ceiling building here, and we're looking for a floor building here. And if we get a break away from there, then we're breaking away from a congestion phase. So it just gives us a heads up as to what we're seeing in terms of all the other aspects of chart behavior. Trend line is diving down again now, and it looks as though we may be coming back down to the volume point of control. We'll see what happens there. Let's just have a look at 5. Just while that's going on, I'll answer that question. Just up on 15 seconds, just gives you an idea of how quick you've got to be with VPA reading. Seeing some buying coming in here now, decent volume, wick to the lower body, and we've got a indecision to follow with a doji. But a little bit of buying coming in there. When it says possible mean reversion on horizon, does that mean a mean reversal back towards the volume point of control? No, it just means that there is a potential reversal. It doesn't specify where that reversal is going to, Linton. It just, you're talking about the Camarilla indicator, which I've got on another screen somewhere, but in terms of the reversal, it's a mean reversion just in terms of the price action chart behavior. It's not indicative of going back to a particular point on the chart. So don't read it as such. I hope that answers that one for you. It's not giving you a specific point. It's just saying, look, there is a potential reversal on the horizon of some description, or there is a potential long building, or there is a potential breakout. Okay, here we are on 5. We've got the volume point of control. We're looking at congestion phase around it. It's what we expect to see. It's what we're seeing in terms of the 15-second chart. Let's just go back to see what's going on in terms of the there we go, indices themselves. Dollar's still rising quite strongly. Yen's in sideways at the moment. Lots of 2-bar reversals, sideways price action. So there's no particularly strong market sentiment right now. And in fact, what we're seeing as this continues is further yen buying, which is why we're seeing a slowdown in that bullish sentiment for indices. And if that pops up through here, 89.18 and onwards, then we like to see the equity markets come off and slow down. Euro's selling off reasonably, pound's still selling off down the bottom there. So back onto the tick charts. Be seeing the same sort of thing. Very sluggish. You can see here we're on 987 tick, which is very, very slow for this market. It's just not going anywhere. And 2584, we're still running at 2584 tick on the other 2 time frames, on the 3-minute and the 5-minute. So it's all very, very sluggish. But nevertheless, hopefully I've shown you take an opportunity, make some money in the market, even where it's relatively slow. And as I said earlier on, that's what's causing us to pause at the moment, and that's the power of multiple timeframes supported by the indicators, because they give you that information which otherwise you would not have a clue about. You think, why is this market paused? Oh, that's why. It's all there. Just see what's happening on gold. That was up to 1504, 1505, I think. Let's see what it is now. It's 1504. Okay, that's in congestion as well. Now we've got the dollar kicking up here. You can see the red line that's rising again. It's not going to help gold very much. You want to see falling gold, a falling dollar for rising commodities generally. Not always. And that's where gold is again. Why is it trading sideways? Partly because we've got the volume point of control is sat here. If the market breaks the upside and we get through 1506, then we've got low volume and we should see a next leg up for it. You can see the strength of support down here. These two guys, very, very strong. These are hugely strong regions of what is acting as support, but would have been in terms of resistance coming up here. So these are very strong on the accumulation distribution indicator, but you can see the general sentiment for gold. We are bullish gold at the moment. You can see the sentiment for gold. It's bullish. The trend monitor is bright blue. And on this occasion, we went through the traditional color change. We went from bright red into the darker red, out into the darker blue, and ultimately through into the brighter blue to support this, this move higher that we're seeing at the moment. But then if you step down onto the daily chart, what have we got ahead in the daily chart? We're coming up to the volume point of control again. So in terms of whether we are likely to see a continuation of that, that is obviously the daily chart. And it just raises the other point about multiple timeframes from a perspective of what trumps what. In other words, a daily time frame, a slower time frame will always carry more weight than a faster time frame. So in other words, the volume point of control on a daily chart will have a much greater impact than the volume point of control on a 5-minute chart, which is common sense really when you think about it, because it's all to do with time. And therefore, if a chart has been based for several days or weeks in a certain area, that area of the chart is massively important and will carry far more weight than somewhere where the instrument's been trading for 5 minutes or 10 minutes or 20 minutes, whatever it may be. It's common sense when you think about it. So from a trading perspective, if you're looking to take an intraday trade on gold, then you've got to be aware of that and accept the fact that this is probably going to congest at this region. Could be for hours, could be for days, but in terms of jumping into the market right now, you've got to be aware of that and factor it into your decision-making process as to whether you're going to take a long position for gold. You've also got dollar rising as well, so it's probably not a great decision right now, unless the gold move is then driven by some sort of risk flow, because gold has many different drivers. It has inflation drivers, it's driven by the dollar, it's driven by risk, all manner of things, and obviously gold markets themselves in terms of using gold for not only processes but for jewelry and all the rest of it. It does have a seasonal aspect also. And just to make the point, you've got the volume point of control here as well, but the volume point of control on the daily chart will trump the volume point of control on the 10-minute chart every time, and that applies to any other aspect of support and resistance or volume, anything else you care to mention. Let's have a quick check on oil. We're on the December contract already. This is on the 1 minute. Again, indicators working exactly the same way. The volume works in exactly the same way. Nice move to the downside, supported by the trend monitor. It's now starting to transition out. It doesn't transition automatically because it's looking at this and just considering whether this is actually a true change in trend. If it is, then it will transition through to the bright blue, which is done. It's gone through the standard color sequence. You can see the volume here is pretty low at the moment, so what you've actually got here is a rally, but you've got falling volume. So at the moment, it doesn't look particularly strong. You've also got a whole raft of levels up and down here in terms of accumulation distribution, which are constantly building and rebuilding. The reason is they're moving around is because they're constantly building in terms of the price action that's in close proximity. These calculations go on all the time. It's not static. The same applies to the volume point of control. The volume point of control may sit in a region for a while, but it doesn't sit there forever. It will move. The same is true for all these other indicators. They are dynamic. They're constantly doing calculations behind the screens, or behind the curtain, if you like, trying to calculate, recalculate, and build the picture at the price action, which is where you need it. No surprise to see that slowing up. given that attenuation in volume here. If you've got a rising market with falling volume, it's not a great signal for a continuation. You want to see rising market with rising volume. And as I said earlier, when you've got a falling market, you want to see rising volume as well, purely because it takes effort to fall as it does to rise. Let's just go back to the indices, see if they're moving anywhere. Okay. So we're going to have another little burst of activity, trying to rally a little bit further. And when they start to move at this sort of speed, you're constantly looking for, that's a nice bit of price action there. Let's move that over to the side there. There we go, nice widespread candle, nice good volume under that, that's a good sign. And whenever you get that, there's going to be traders jumping in, selling on selling profits, selling to take the profits off the table. Get through that low volume region pretty quickly. And now what you want to see on the 5-minute is really a break away from this volume point of control. We've had the congestion building, which is what we expected to see, so we had to be patient. And now we want to see it force its way up to 60 and beyond, and if it does so, then we're through there and maybe on up to the next level for some more points. Trend monitor's bright blue, trend monitor's bright blue, trend monitor's bright blue. You can see its transition through here. The trend line is now starting to climb on the 10-minute. What's happening on 15? Well, it's transitioned through to the darker red. We want to see that ripple effect through. Because what happens, and it's the analogy I always use, it's the one of a pebble in a pond. You start with the fastest chart, that is where the changes occur, and if it's a true change, then it will ripple its way across the multiple time frames and out, and ultimately through to your slowest time frame, whatever that may be. So in this case, we're looking at the 15-second, we're going out to the 5-minute, we're seeing it there, we're seeing the change in 10, we're starting to see that change in 15. The 60-minute chart, interestingly, there we are, is already reflecting a bullish sentiment. It has not changed, it's not reflected any change, because on a 60-minute time frame, you're looking at a much, much slower perspective. And if you're going to get any change down here in terms of intraday, then that is going to be a significant move. It hasn't. What we've seen here, you can see it, we had the bearish trend into the change, out the other side, and ultimately through into the bullish phase of price action. Yes, it's been congesting around here, but not long enough to actually change this bullish sentiment towards the market right now. Got a lot of volume came in under that candle, ton of volume, heavy selling under this one, but we got pretty much equally heavy buying under this candle, which is now starting to push this one higher. And when that one closes out in whatever it is, a little while, then I haven't got the volume switched on. The reason there's no volume building under here is because I've got so many charts running. If I try and put it all on, then it'll slow the system up too much. But you can either switch it on or have it building in real time. Some of the charts I have got it building in real time, but not on that one particularly. You just flick it on and off in terms of NinjaTrader. It's very easy. Okay, we've come to another little bit of a pause point. But this is not going to be reflected over here because this is so much slower than this chart. All this chart gives you, it just gives you perspective on what is going on in each of these little, if this was a 1-minute candle, you'd see 4 of these building in a 1-minute, and so on and so forth. You've got 20 of these candles on the 15-second are building on this 5-minute time frame. This may be too quick, maybe too noisy for you, but all I would say is from a study perspective, study volume price analysis on a fast chart. If you've not got Ninja, if you've got MT4, MT5, use the 1-minute time frame and just read the chart as it goes along. Read it in a good lively environment, so it's not particularly sluggish. Read it in the London session or the US session, running together, and just read and understand volume price analysis and what it's telling you, and hopefully also in conjunction with the quantum indicators, which we developed to support the methodology. I imagine all the three of them are doing pretty much the same. Let's have a quick look. There we go. Yeah, I'll pass back to Anna. I think that's on the 5 minutes. So there we are, just giving you an idea of where we are in terms of the three indices. That's the NQ, which is what we've been looking at. This is the ES. So in actual fact of all of them, and this you will find, you will have to, if you're trading indices, you will have to tease apart which ones are actually moving and which ones are not. You can see instantly from this, the Nasdaq is moving the strongest of the lot. In fact, we have some divergence because on the daily basis, this is the NQ. You can see this is up. It's coming up to a very strong level here of potential resistance coming into play now at this level, this red dashed line, pretty heavy there. You can see it's come into play several times already, and certainly over here as well. So for this market to advance, we need to break that. It needs to be broken with volume as well. In terms of the Dow, this is the YM. That's pretty sluggish right now. That's just created a little saucer around the volume point of control. It's not moving as strongly. The question you'd have to ask yourself now is the Nasdaq actually leading this group? Is this the start of a nice bullish development of trend, which is one reason why you need to have all three of these open simultaneously? Not only for that reason, but also the volume relationships with price will give you slightly different perspectives as to what's going on. If I was looking at this now and seeing this advance, I'd certainly be looking at the YM and thinking, is the NQ going to drag this YM higher and away from this volume point of control? What's on the chart, etc., etc. What's going on in terms of the ES? Pretty much the same. It's about halfway, I'd say. It's halfway between the Nasdaq and the YM. So this is showing bullish intent. It's starting to siphon through or cycle through into blue. You've got some pretty stiff resistance in terms of price action in the way here, and some further price resistance above over here as well. In terms of the volume profiles, it looks a little bit weak at the moment. Hopefully that would strengthen up as it gets underway. Where are we up to on the NQ? We're up to almost 79.60. So it just gives you a perspective. When you're looking at this in isolation, you're looking at it and saying, okay, oh, this is great. You know, all the US indices are roaring ahead, you know, comparatively. Well, they're not actually. You know, right now we've got volatility coming in. I don't know whether Mr. Pence is speaking, is he?
Well, I'm just trying to find it. I'm talking for it. Said he's going to be speaking soon.
Okay, we've got right. I'll move it over to Anna, but just what's interesting, bang, we got volatility come in. The volatility triggers instantly as soon as it's moved outside average true range. Ton of volume underneath. Now we're starting to see volatility appear in the market. Once you start to see that, it sets the alarm bells ringing. Haven't seen it over here on the 5 minute yet. We may well do if this spikes higher. And what I said this morning, volatility is nothing more than a compression of time. That's all it is. It's nothing else. It's nothing mysterious or magic or anything else. It's just a compression of time. Just see if it does develop. This is what I meant about staying in a trend. If you got in here down at 35 and 40 and you're now starting to see this market take off as it is, you're going to be pig sick because you haven't sat through it. Now what we're seeing is volatility. The question you've got to ask yourself is it time to close out now, or am I going to sit tight? 15-second may be a bit too quick for you. Certainly if you see volatility on anything from the 2, 3, 4 minute and you're on a 5 minute, 10 minute chart, then I would say, yeah, close out, take your money off the table, wait for the volatility to pass, wait for the congestion, or if it is a full-blown reversal, fine, even better. And just you can jump back in the market once it clears. You had the volatility here, moved into congestion. You've got another signal here. It'll move into congestion or reverse. Look at the volume under there. You've got heavy selling in there, wicks down here. Not so much heavy selling under that one. That's not too bad. We may clear this one. You need to see it through 68, 69. If you've closed out and you want to jump back in, then you've got to wait for it to clear the top of this this previous guy here. Okay. Sorry, Dan. Okay. I've probably gone over time, but it's this is on the NQ. I'm going to pass back to Aaron at that point, as my throat's getting a bit dry. It's good fun, and that's the way trading should be. Good fun, not particularly stressful. You're in this to make money, and you just want to use the indicators to help you make money. It's simple as that. Because we all need help. We've been doing this 20 years, and we still use all these indicators just to help us, just to give us the confidence to stay in and help us in our decision making, which is based on volume price analysis, but they support it. That's what they do. Nice move. And remember, at the start of it, this was a reversal move. You remember back here, we were talking about reversals and said, right, okay, look, this looks like a reversal setting up. It's exactly what we're seeing. Now we're charging through 70. Lovely jubbly, happy days. Right, I'm going to pass back to Anna.
While David was looking at that, I've actually got my charts set up to the YM. I've got a Renko chart, I've got a 1 minute, a 3 minute, a 10 minute, and I've also got the 60 minute. And the 60 minute is actually quite important because it gives me an indication of where this current move is likely to come to a pause point. This is the open. This is where we had that big big fall, that big volatility candle. Then, in fact, we started a reversal. We've got a classic hammer candle with a ton of volume coming in under the hourly chart. So the expectation is with that amount of volume coming, that amount of buying coming in, this was going to move higher. But the point is, where do you get in on the faster charts? Well, the faster charts actually told us, because if we go back to the 1 minute chart, the buying actually took it to the volume point of control. This is this yellow hatch line here. You had a bit of congestion before we have the breakaway, the breakout from this congestion phase. The nice thing about breakout and using the VPOC is that it's so easy to see where your stop is likely to be. Where is the logical place to place your stop? Well, it's going to be somewhere here, somewhere where, if it's going to come back and retest, this is a very solid platform of support. Now, what's interesting with the YM is that we had the volume point of control on the 1 minute, but we had a very similar picture on the 3 minute. This is obviously the fall. Then we have a bullish. We had a little bit of congestion. Then we had a bullish engulfing candle there, but it didn't immediately carry on. We had a little bit of pullback to the volume point of control, some congestion, then a retest, but it didn't get back to the lows of these two candles. It really sat on the VPOC, kind of moving sideways. So on the 2 time frames that I was looking at, I had a very similar looking chart. On both time frames, I had the VPOC, being at a critical point on the chart. So what is it telling me? That, if it is going to be breaking away, it's going to break away on this, it's going to break away on the 3, and lo and behold, on the 10 minute, again, very similar, a lot of wicks to the bottom of the candles, buying coming in there. We had volume under that one, then the volume falls away on this candle. As you can see here, the selling is kind of drying up under there. It did go further down, but the wick to the bottom of the candle tells us there is buying under this candle. But it doesn't, you have to be aware with candles and with wicks is, you see a potential signal. We used to react think, oh great, all the buying's coming in and it's going to go straight back up. It doesn't. It can do. You can get a V, what we call a V-shaped reversal, but it doesn't. It will go sideways. Maybe you get a little test to make sure there's no more selling there. We have another candle here. The volume is falling from where it is at the open, but you have to read this in context of the time. You're always going to get a rush of volume in when the open, when you get the physical open. Look what it's done to the volume during Globex. It's completely crushed it in the sense that it's, it makes it look terribly insignificant. But at the time, that is perfectly valid. So you have to read volume in context, and it is also relative to the trading session in question. Now, it's trying to move higher on the 10 minute. As I said, I have the 60 minute, and I know immediately where is this going to pause. It's going to pause here at the volume point of control. This is support and resistance with based on volume, not just price-based support and resistance, but it's actually got one. And the VPOC is, you know, the point on the chart. It's the fulcrum of the chart, but it's also the point on the chart that has the most transacted volume. So am I surprised to see that pull back? No, of course not. So going back to my 1 minute chart here, where I was looking for the entry, I actually have the trend dots here as well as the trend monitor, and I have this lining up, if you like, on the different time frames. So that to me would have been a perfectly valid move. But I also have to see, well, where is it heading to? On the 10 minute, I also have these very, very strong regions of price-based resistance here. I've got a blue and a red hatch, and you can see the number of times this has been tested. This is 9. I think that says, goodness gracious, that says 16. To get through that is going to take a monumental effort, but if it does get through, it will actually provide a very strong platform of support. So, you know, all good fun, but all in the context of, if you like, on the slowest time frame, the condition of the chart. This is not a chart that is in a nice, easy, upward, stately trend, as it were. There's a lot of choppiness. It's a lot of congestion. If you look at the daily, if you look at the weekly, and so we're looking at the monthly. So trading opportunities, if you see them and they're there, take them and get out. This is, I think that's the only way you can trade these markets at the moment. Do you agree, David? Do you agree? Yeah, absolutely. And further confirmation, if confirmation were needed, that we have come to a point where, you know, we've got some strong resistance, volume-based resistance, and we need to get through. And also, you've also got the opening volatility, the candle of the open, which was a volatility candle, also of itself will give you some levels. So you've got the high of this particular session. And look, you know, as I said earlier, we are reaching these all-time highs again. Price action is inevitably going to be very, very nervous, very, very, very choppy. You know, it's not going to be a nice, smooth, easy run. And this is the daily chart. And look at the candles on this daily chart. You know, great big swings one way and swinging another. And as I said, and we've also got Pence coming along soon. So expect some more volatility. What's nice about the daily chart is we've got this support platform here, this blue line. The VPOC is some distance away. That will certainly provide some support. It's been supporting. The candle the wick went through there, but it closed above it. Support, support, support. That bounced off there. So you know, we've got our levels in place, as it were. So we will see what happens. David says, I can map out. Thank you so much for coming along today. If you have any questions on anything we've said, then you can either drop me a line at anna@annacooling.com or david@quantumtrading.com. I'll be happy to answer your questions. Thank you so much for coming, as I said, for coming along. Enjoy the rest of the trading day, the rest of the trading week. It's certainly a great time to be a trader. It's always a great time to be a trader. We are next week at the same time, and we'll see you then.